Recently, in the Indian Lok Sabha, a bill has been passed, but unfortunately with very less debate. But the bill has tremendous consequences for the incomes of the people across the country. And the bill that has been passed is the New Income Tax Bill 2025, which is also called as Income Tax Number 2 Bill of 2025. And it has been passed in the Lok Sabha and now it has moved the Rajya Sabha. This is a bill with tremendous consequences, and if the opposition party got involved in the discussions of the bill, it would have been much better. But the provisions of the bill are much appreciable, and if you look at it, this act or this bill tries to replace the Income Tax Act of 1961. This is a very age-old act, and after that in India, the tax system has substantially got altered post 1991. And the Income Tax Act of 1991, it has been amended multiple number of times. And along with the amendments, one more thing that has been done to the act is there is a lot of legal complexity in the act. Many provisions contradict each other and it creates too many authorities, too many tribunals and too much scope for legal dispute. That is the reason why the central government in its right judgment wanted to replace this complex act with a more simple act. The act or the bill, it in fact reduces the number of provisions which are present in the original Income Tax Act. There were somewhere around 800 sections which were present. Now it has been reduced to 536 in the new bill. Then apart from that, many chapters and sections have been completely reorganized and structurally, logically grouped. And along with that, okay, so they have been grouped in a fashion where all the similar provisions are put together. We know very well that paying the income tax, the taxpayers face a lot of complication and complexity, leading them to depend on the chartered accountants. And this bill tries to at least provide a chance for the educated IT filers in order to self-file their accounts. That is the main intention behind the passage of this act. And this act also provides a very clear language in order to, understand the act. And the core philosophy of the new income tax bill, it can be formulated in the word simple. And simple means streamlined structure and language. I means integrated and concise. M means minimized litigation. P means practical and transparent. L means learn and adopt. E means efficient tax reforms. So this acronym, collectively named as simple, it provides this kind of reforms for the tax compilation. Now, first and foremost, in the Income Tax Act bill that has been passed in the Lok Sabha, it has been stated that income up to 12 lakh rupees per year will be exempt from income taxation. We already know that in the budget, it has been introduced that till 12 lakhs, almost effectively, we need not pay any tax. But now, the new income tax bill adds 75,000 more to it as a standard deduction and makes it a 12.75 lakh tax exempt. Then apart from that, the second important provision is it provides for digital first and faceless assessments. Digital first means what? First and foremost, for any activity related to income tax, rather than going for the conventional way of checking, so all the things would be done in a digital format. And faceless assessment is a new and unique provision, and it is very, very important primarily because the income tax department, it has been alleged that there is a lot of corruption there, and some thinkers even use the word tax terrorism in order to define the Indian taxation. That is the reason why, to remove all this discretion and to make the things more transparent and clear, faceless assessment has been introduced. Then apart from the faceless assessment, there is also procedural improvements conducted, particularly in the issue of tax deducted at source. In fact, in the tax deducted at source, the refunds from now on, they would be given without any penalties. Even though there is a late in filing of the TDS, then also the penalties would not be imposed on you. Then apart from this, one more important thing is, they also said that there would be nil TDS certificates provided for some employees. Let's suppose an employee is getting income below 12 lakh rupees, he can access the nil TDS certificate, so that the employers cannot cut 10% of their salary which is being paid to them. So this is one more improvement that has been made. Then along with that, stricter rules on anonymous donations. It is said that from now on, less than or not more than 5% of the total donations for the charitable institutions and the temples can be from or can be claimed as anonymous donations. So it closes the door for money laundering. Then over and above this, one more important provision that has been provided is, so in fact on short-term capital gains tax also there is a lot of reform that is ongoing. And along with that, one more important thing is, earlier for the unified pension scheme there used to be a separate tax pattern, and for national pension scheme there used to be a separate tax pattern. Now a uniform tax pattern has been imposed across the disciplines. Then apart from this, one more important thing that has been done is the expected impact. If you look at it, for salaried employees there is higher tax-free limit. For businesses there is more predictable tax administration. For investors there is rebate on capital gains. And for the government, even though in the short term it will lead to 4% dip in the income tax revenues for the government, but it will lead to a recovery in the long run, where through higher compliance and broadened tax base, they will be able to recover much more money from the public. Then the guiding philosophy of this act, it seems to be very clearly equity, simplicity, transparency and certainty. So, and this is a much welcome bill, but if it has been followed by thorough discussion and debate in the parliament, it would have built better consensus among the ruling and opposition political party. But even though it is a much needed reform, so because the Income Tax Act of 1961, it is a dated act today. Thank you.